Welcome to TheoTrade. This is Don Kaufman doing the weekend update here on November 12th, 2016. What a week we just went through. Well, all the politics, all the election is behind us. And I have to say some of the volatility, hey, again, all politics aside, the volatility, quite spectacular. If you're into volatility, I mean, hey, this past week, it kind of did it for me. I'll tell you right now, we're not going to be too backward looking. We'll briefly look at a handful of things from this previous week, but we're going to be much more forward looking and set up what I think are going to be some decent trade opportunities as again, some of this recent volatility. I mean, that's what it does. This is the time to trade right now. You know, it's no holds barred in terms of volatility. Even though you look over at the VIX and it's back down to 14, you know, hey, listen, these are the S&P futures, and the chart that you're looking at happens to be 90-day 4-hour. And I just wanted to show, obviously, the S&P's going limit down. Haven't had to say that in a long time. Well, not since Brexit. So I zoom out for a second because I wanted to show, of course, in this chart here, this 90-day and 4 hours, all the way back here in mid-July, this is actually us coming out of Brexit, and the S&P futures found a nice home. Guess where that home happens to be? Right around 2160 and change. How ironic that that's where we ended up the entire week. Now, with all of this volatility, one of the first things that I want to cover here, again, we're going to be backward looking for a very short amount of time, and then we're going to present a couple of trade ideas. But one of the things that is just phenomenal to me, and it's pretty amazing, is through all this volatility that we saw, and you know, here's the week we traded all the way again down to 20, 28, exploded back to 2160. And in previous weeks, I've been talking about this election spread, how really what was going on, not only was the volatility increasing prior to the election, but really the results of the election caught a lot of people off guard. The question is, did the results from the election catch the marketplace off guard? Okay, because again, we kept mentioning, hey, the SPX, and for those of you that do not recall or just don't tune into that many videos over here, we were talking about a spread that existed. All right, and that was the expected move coming into the election. So what I'm going to do here is I'm going to close up this left side bar, and on thinkorswim, I'm going to go to the Analyze tab, and I'm going to go into what's called Think Back. This is just end of day data. And the reason I want to look at it is just to display, all right, this entire week. So I can come right up here and I can change the date. Obviously, today is November 12th, okay? We're actually going to back up to November 6th. And again, just showing the date up here. All right, so now we're back to the time frame again of November 6th prior to the election. And what I kept talking about for weeks, pretty much ad nauseum, was take a look at the spread between, okay, the November 7th, which was a Monday, okay, and the November 9th, which was a Wednesday. And you could see how large the volatility was becoming. Again, just a few days, though, prior to the election, the volatility dropped off, okay? Markets rallied a little bit. Hey, listen, a lot of people thought the election was, it's all over with. But I'll tell you what, if you looked at the full week, okay, the market was portraying movement to be at about plus or minus $71. So the question is, all right, we started last week at about what? 2085. Again, we started last week and it was, there was a sell-off, then we rallied a little bit, but the week started at 2085. Okay, 5 days, all right, and that takes us through Friday. It was portraying, again, about a $71 expected move. Now, where did we end up on the week? Do the math really quick here. Week started 2085. We ended up on the week 2164. How far did we move? It's exactly $79. Pretty amazing, given the fact, what did the market know? Absolutely nothing. It didn't know anything about the election. Didn't need to know, okay? The expected moves now are driving order flow. So, people spend all this time trying to, we're going to move up, we're going to move down. They're worried to death about the, this and that. In the end, look at the expected move. $8 off. We had a 140-point move one evening. and yet the entire week ends up 8 points off the expected move. Okay, that's not just by chance, folks. I mean, that is, these expected moves now are driving the order flow. And what that ultimately means is the amount of volume and open interest that's in the SPX trade. And I go to the SPX and I'll just, display SPX options. These happen to be Monday, all right? And that's this coming Monday. So November 14th, it's this coming Monday. You look at the volume and the open interest out there. These weeklies are being traded so heavily, okay? It's actually moving markets towards the expectations of movement. Option pricing now is often the cart leading the horse. That is, the option pricing itself is dictating movements, not only in the SPX, the S&Ps, the spiders, and the entire market as a whole. It's something really to think about, because during the time of Brexit, we saw very, very similar circumstances to what we're seeing right now. Nevertheless, okay, after a fairly epic week over here, one thing that really strikes me is that volatility as related to the VIX has really kind of cooled off. So let's cruise over to volatility, take a quick glance at it. Volatility has really cooled off. But again, that's the VIX. And frankly speaking, I don't really look at the VIX very much. Why? Because that's, kind of like my predecessor's tool for trying to figure out volatility in the market. Today, everybody looks at the vol futures. All right. And one thing that actually strikes me a little bit is curious is, yes, the volatility futures backed off, and I'm looking at all the volatility futures in this 4-day vol future. It's dead. Don't worry about it. It's 4 days to live. The vol future we want to start looking at is the 39-day volatility future. Okay. And I'll have you note, it's still bid to 16. That, yes, sure, it backed off. Sure, there was a lot of volatility out there. Okay, but it's still elevated on a relative basis. So yes, the risk has subsided to a degree, but the market is still packing a degree of risk in there. As is, if you take a look at the VVIX also backed off, okay? But let's just put it this way, and this is a great chart, I think, to look at this. The vol futures, very difficult to look at a chart on those to discern anything. But the point that I'm trying to make is that here's volatility coming into the election. It subsides, yeah, but it hasn't completely abated. And after an event like this, everybody's like, okay, put down your weapons. We're all good. Yeah, you're not quite ready to do that just yet. All right. There's still some signs of some extremes out there. And let me show you what I mean by the extremes. Now, we're going to be a little bit more, forward looking. I like to do some comparisons. And one of the things that really strikes me, and I've been talking a lot about this TheoTrade, is the NASDAQ versus the spiders, okay, versus the IWM. And that's, so it's the NASDAQ versus the S&P versus the Russell. And I've got a prefabricated style. I'm going to cruise down here to load up the style, QQQ, spiders, IWM, snap the chart into that. All right, I'm gonna close up this left side bar again. All right, so let's show you just very distinctly what we happen to be looking at here. First and foremost, this happens to be a 6-month comparison. That's right, a 6-month comparison. And right up here, leading the pack, which by a very wide margin, is the IWM, okay? All right, middle of your screen over here. What's this little guy over here, okay? Well, that little guy over there happens to be the Qs. And last but not least, bringing up the back of the pack, the spiders. And of course, these are color coordinated and distinct on your screen. So you get the IWM outperforming now the Qs and the spiders. Again, one thing I want to display is the irony of that is if you look back a substantial period of time, you'll actually see here on the bottom of the screen, right there on the bottom of the screen, that's the IWM, okay? On the very top of your screen is the Qs. Oh, all right. So what are we getting? That happens to be a 3-year. If you look at a 1-year, what do you see? The IWM completely and totally outperforming. Well, any way you want to put this. Now, there are several different types of trades you can do in this particular circumstance. For those of you that are a little bit more, I guess, up the learning curve, you could probably do a pairs trade. A pairs trade is something that, we do talk about here at TheoTrade from time to time. And it's just, when I say it's a little up the learning curve, is if you're going to look at this as a pairs trade, it would be short IWM, okay, you basically short the outperformer and buy the underperformer. Well, in this case, the underperformer could be the Qs or it could be the spiders. Nevertheless, all right, you can see the outperformer here, again, without question, is the IWM. This recent rally is nothing less than monumental inside of the Russell. IWM and Russell, of course, I use interchangeable, as the IWM is the ETF for the Russell. Now, again, pairs trade is a little bit more complicated because the IWM happens to have slightly more volatility than does the spiders and, of course, the Qs. So it makes the pair a little bit different. So what I'm going to do in this particular circumstance is, just cut to the chase. Let's just go after an IWM trade. Okay, I'm going to clear the chart. I'm just going to go after an IWM trade. Again, on a percentage basis, this is nothing less than spectacular. The outperformance, if you will. Now, show prices percentage over here. I just wanted you to see on a 9-month basis. Here we are. Okay, here we are. We're up about, 19%. And all of a sudden, now we're up 31%. Okay, talk about an overblown move. So you have to decide, hey, is that reasonable? Is this a reasonable move to the upside? Well, tell you what, I got to trade whether you think it's reasonable or not, okay? And we're actually going to build 2 independent trades on here. So I've gone about 34 days out. And one of the trades that I'm thinking about doing is a ratio back spread. Now, I don't often talk about ratio back spreads, but extreme markets call for extreme measures. And what I can do with a ratio back spread, all right, and again, it's up the learning curve a little bit here, is I'm actually going to go out there and sell one, okay, of the 129 calls, and I'm going to buy 2 of the 132 calls, okay? So you're selling a 29, buying a 32 times 2. What might that look like? So go over to the Analyze tab. All right, first of all, I've cleaned out the risk profile over here. Nothing to see in the risk profile. Go back to the trade tab. I'm going to take the trade and I'm going to drop it over to Analyze the trade. So this is what the back spread happens to look like. First of all, again, I'm selling the 29, buying 2 of the 132s for about a 27-cent credit. So the trade's put on for a credit. What I wanted you to see in here is this is where the market currently is. All right, I'm going to sketch this out for you. So there's our lovely market right there. If we crash and burn, we keep 27 cents. If we rally huge, we have the opportunity to make a lot. But if we rally right to that neighborhood, to 132, we hit what's called the Valley of Death. And the Valley of Death, that's going to cost us about $250 a risk per spread. Not that horrible. So why would I consider this trade if it's got the Valley of Death? Why would I consider it? I don't know. I kind of like it. No, I like it because this does have all the hallmarks of a little bit of a short squeeze. So if we're going to squeeze up, we may explode higher. Okay. At the same time, let's just say you think the market's going to crater. If it does crater and falls back down, yes, crater means slip to the downside. If the market does crater, I still get to keep the 27 cents credit. So if we're going to squeeze up like we've been doing, okay, hey, we got all the way up to 134. Now, this is looking at worst case scenario. See this? All right. That line is the worst case scenario line. And I want to make that, again, very, very distinct, that this is your worst case scenario line. This, okay, could be the next couple of days. If the market just shoots up, the trade is instantly profitable. The only way you hit the Valley of Death is all on expiration day. So you can't lose the full $260 until expiration. Now, that's one portion of it. So that's the back spread over here. In addition to that, okay, let's have a party. Let's go out and buy the 128, 126 put spread for a 77-cent debit. So if I go over here to Analyze the trade, dun, da, 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 you're like, what? Okay, so what I'm doing is actually I am buying a ratio back spread for a credit. But just because you do a trade for a credit, listen, that trade's got risk, all right? You can lose $273 in the back spread. And this other trade here is buying a put spread. So if we dip and dip hard, you're paying 77 cents, okay, for the put spread there. That can be worth what? $2, of which you paid 77 cents up front. Again, you hit confirm and send over here. Your max risk is 77 cents. The max profit is $123. not half bad. Just a quick risk profile though. Is this a bet to the downside? Yeah, it is a bet to the downside. With a beautiful hedge though, in case we explode higher, could be profitable. All right. You do have an area here though, from right about where we're currently trading. Okay. So where are we currently trading? About 127.36. Again, go back to the Analyze tab. That's about your break-even point. So anything lower, and we're very nicely profitable. Anything higher, okay, we take a little bit of risk. But then again, we shoot higher and explode higher. And if you looked at the chart like we've been doing, if we continue on this trajectory to any stretch of the imagination, we're going to be beautiful. Take a look at it. All right. Now, this coming week, again, sure, that's a nice trade. This coming week, keep your wits about you. It ain't over. It ain't Christmas. Okay. So we still have a full week of trade before coming into the Thanksgiving holiday. And I'm telling you, if you look at some of the tech over here, the market, it is not through some of the volatility out there. And I suspect that you're going to see a rotation out of stocks. Like, for example, I've been positioning into Caterpillar. I've been positioning short into Caterpillar over here. I don't think Caterpillar's going to stay up. You've got a couple of stocks that, got fed by the Trump rally, and a few of those stocks are going to get hammered. Is this company, you have to really ask yourself questions, very, very simple questions. Here's a stock that traded from roughly $80 to $94. Is a company really better than it was a week ago? It might be better off 3 or 4 years down the road, some policies, okay? But you have to recognize, is a company really some of these stocks moving 15, 20% in a matter of days? Is a company really 15 or 20% better? These could be phenomenal short opportunities. What I'm doing is kind of nibbling a little bit on the short side. I'm using both in-out spreads and shorting outright stock in some cases. Again, the opportunities with this kind of volatility, they're huge, and you got to jump on them right now. The opportunity here, not too much in terms of premium selling because the VIX has already been knocked down. So I don't want to hear about, I need to sell options. I'm a huge option seller. It's not the time for it. Use in-out spreads. You take some directional risk, okay? You get long some of the stocks that have been hammered. Get short a couple of stocks that have rallied over here. But again, no two ways about this. Volatility is not dead. Thanks everybody for joining us here at TheoTrade on the Weekend Update. Have a great weekend. Bye-bye.